Hello everyone, it's Tim Davis coming to you guys with another video. I want to challenge everyone to take a step back and look at the broader, bigger picture of what the markets are showing us longer term and what we could possibly be in store for. I want to take a look at a couple ETFs just by looking at the monthly chart and the monthly chart only, and want to show you guys what the setup looks like. Here is a current monthly chart of the SPY ETF. And it goes back, looking back over the past 20 years actually, but I want to focus on the current time frame from the beginning of, towards the end of 2021 to where we are now with price action. And here's the trend line that I drew from the minute we topped out on the SPY around the beginning of 2022 to where we are now. And right now we're in the month of February. And we are approaching the end of February, and look at the way price action looks at the end of February. February month is struggling to get above a major level of resistance. We're struggling to get back above a major level of resistance after price kind of got a good bounce off of the 50-day moving average back in October of 2022. Are we about to be on the verge of a major fail at this point? We start to see prices start to shift really lower in March, April, May, and so on and so forth. I'm going to be watching this very, very closely, because even though we got a bounce from the October lows, price action stayed very, very tight for the past couple of months, very, very tight, very close to this 50-day moving average, meaning that the bulls are really struggling to really get a huge ricochet for with the longer term picture well above this 50-day moving average on a monthly chart. As we did here from the 2020 bounce. See the 2020 bounce, price action took a huge bounce on a monthly chart and got well above the 50-day moving average, leaving a space. And you guys know how, like, what I always say about space in between price action and the moving average. It normally acts as a price act. I mean, the moving average normally will act as a magnet and start to draw price action back down to it, no matter what time frame you're looking at, and even on a monthly chart, as we see here. Eventually, after we topped out here with the moving average not moving up along with price, the price action started to move back down towards the moving average. And then we're very close in this area to the moving average at a level of resistance in the month of February. So the question is, do we finally get this bounce and pull away from the moving average? Or are we about to see a drop below this moving average on a monthly chart? That is to be determined, but I think February, how February ends, is going to be a crucial, crucial decision as to which way markets decide to go in March, April, or the rest of this year, should I say, in general, because we are very close to the moving average again, and we are butting our head up against a level of resistance. That's something to pay close attention to, and keep in mind that this was our top on the SPY around the beginning of 2022. And since then, we have failed to make a huge run back up towards that level, and we are still in a bearish market. Now, if you look at the other ETFs, such as the Diamonds, which is the ETF for the Dow Jones, DIA, you're going to see the same type of action. But one thing I want to point out in the Diamonds are kind of like trying to give us a fair warning in advance, because something that the Diamonds is starting to show in the oscillators on a monthly chart that the others aren't, is that we're starting to see the oscillators within the full stochastic starting to bend and trend back lower after a sharp ricochet off the bottom, or should I say a sharp ricochet off the 50-day moving average back in October. We're starting to see on the monthly chart, starting to see price action starting to get weaker, or should I say the momentum is starting to lose its flavor, and we're starting to see price action, but it's head strongly up against this level of resistance, showing that we are slowly but surely being drawn back to this 50-day moving average. And the question is, if this is what's happening over the next couple of months, do we hold this 50-day, or do we finally give away and head back down? My thesis is that sometime this year, I do believe we're probably going to give way and eventually break back down towards this 50-day, make a test of the 50-day like we did back here in October. And then we have to see who wins this test. Do the bulls find a way to push price action back up after we bounce off of this 50-day sometime this year, or do we break below it? With all this going on, there's a huge possible chance that we can break below it. We still got the Fed's interested in raising rates with the mindset of taming this inflation once and for all. And we still got a lot of negative economic news and threats of wars in our economy and in our world. Look at the wins percentage on the monthly chart. We are starting to hinge lower, and the gap with the negative and the positive oscillators in the CCI is starting to close, with this starting to bend a lower as well. So it looks like the DIA, or the diamonds, or the Dow Jones ETF is starting to give us an advance warning that this move up we saw in October is really starting to slow. It is starting to slow, as we can see, with these last couple months being very tight in action after this good bounce from October, but only to butt its head up against this level of resistance and been unable to break above it. And now we're starting to see that the month of October is looking extremely negative. And if we don't finish the month of October, and we only got a few days left, with the strong green candle here, we could start to see the momentum pick up towards the downside throughout the rest of this year, or at least the first half of this year. So I wanted to point that out and let you guys take a step back and just ponder on the longer term picture and what price action looks like and what we could possibly be in store for. That is the DIA. Now we took a look at the SPY, the DIA. How about the triple Qs, which represents the NASDAQ, or the heavy NASDAQ stocks, such as a lot of the tech stocks. Here too, take a look at how the month of February is starting to pan out. We got a big bump up against this level of resistance, and look at that particular candle. Price action has been pushed back, which means that the bears are trying to take over February completely. If that continues, we could see a very quick snapback to this 50-day moving average, and possibly a failure there after butting head up against a level of resistance. Again, price action, even though we got a nice ricochet off of the October lows, price action did not, on the triple Qs, did not venture far away from the moving average. Keep that out. Very tight, close to the 50-day moving average. Meaning that even though we saw this rally, in general, it still looks to be a possible bear market rally, because there was no huge bounce off of this 50-day moving average, unlike we did back in 2020. See, big difference. 2020, when we bounced off that 20-day, the very next month, we really took off. Not so much when we took a bounce in October. We didn't really take off. We just pretty much pandered, just hanging right above that 50-day, not making a huge significant decision to decide to break out of the bearish market and head to a new bull market. So that's something to pay close attention to for those who are thinking we're about to break out to this new bullish market. The market has not decided that just yet. And let's take a look at the Russell ETF, which is the IWM on this monthly chart. And we'll see the same scenario. Take a look at the month of February, which is what we're in now. We're almost at the end of February. Today is February the 25th. And the monthly chart is looking, monthly candle is looking extremely bearish, butting its head up again against a level of resistance, with price action taking a bounce from the February lows, but staying very, very close to the 50-day moving average, not really giving us any huge conviction for the bulls. Now, so with that said, you got to really pay close attention for those who got a stronger, longer-term bullish outlook as to what the bigger picture is showing us. Are we on the verge of a breakdown below this 50-day moving average and a possible bigger move to the downside sometime this year? That is a possibility, unless we start to see a move like we did in October and in beginning of 2020, which so far right now doesn't look to be the same type of outcome to me. Does not look like this. So that does not look like this. Now we are seeing a possible rounding bottom, but the key test here and a possible rounding bottom is we need to see a confirmation of a huge breakout to the upside. So we need March to really, really break out to the upside in a big way. That is going to be the key test as we approach spring. The price action stop this consolidation pattern and take a huge bounce to the upside, or does it stop this consolidation pattern and drop lower? That is to be determined, but this is where we are right now. The month of February is looking extremely bearish, like we're going to have a bearish end of the month. And if we have a bearish end of the month, we got to pay attention to what happens in March. Does March finally get price action for the bulls well above this area of resistance? Or does it falter and head back down towards this 50-day? And if we do on a monthly chart break this 50-day, this time frame is really, really going to set the precedence for everything else afterward. Take a look at one more monthly chart, and that'll be my blurb on the longer term or the bigger picture look. Here's a look at the VIX on a monthly chart. Look at what the VIX is showing us. Again, back down to a level of resistance, and it's been holding this level of resistance quite nicely. Right around that level, we came back down towards this 50-day, and it's been hovering right in this general area for quite some time, with the oscillators and the full stochastics, range percentage, CCI, all starting to show a different picture, almost as though it is at the end of a pullback, a longer term pullback. Are we on the verge of about to see a real sharp move up in the VIX throughout the rest of this year? That's a huge possibility, folks. And if that's the case, then we can definitely see the opposite in the overall markets. Just wanted to point that out. Enjoy the rest of your weekend, folks. And hopefully this is some news you can use and something that will help you lay down or outlay your future for the rest of 2023 and beyond. Have a great weekend.